Hello and welcome from Trend Signal for our review of the data and events the week beginning the 30th of June. Last week saw the US dollar give quite a bit of ground back to the euro and the yen, while sterling continues to hover around a 6-year high versus the US dollar and a 1.5-year high or so versus the euro. Gold did little last week, really, following the rally the previous week, trading in a fairly narrow range. Brent crude fell as the Iraq situation, whilst still in a high degree of flux, seemed less serious, at least less serious for oil, that is. US GDP, well, that was a shocking revision last Wednesday, revised down to 2.9%. That's a contraction of 2.9% in the Q1. Largely as a result of the very appalling weather, but a very bad number, and there are question marks now over how the US economy can deliver the 2.2% forecast growth this year, so a lot to make up. Equities had a mixed week last week, surprisingly actually, in light of the GDP data. US equities only slipped slightly, whilst European equities fell back more sharply, with their DAX off about 180 points or 1.8%, following some fairly disappointing data there. Okay, we've got a very, very packed calendar this week. It is the end of the first half of the year on Monday today, obviously end of the quarter and end of the month. So we may experience a little bit of window dressing, perhaps, not altogether sure, but it's a very, very busy day, a busy week this week, I should say. We have to cram everything into 4 days in the US because it's Independence Day on Friday, the 4th of July, so it's a market holiday on Friday, which means all the data, and that includes our non-farm payroll, the employment data in the US, which is normally released on the first Friday of the month, that'll be released on Thursday, so a very, very busy calendar. Let's start with that calendar now and just see what's coming out this week. Let's just update it so we can just check on what we've already had. The first main bit of data, but by the time you've read this, it'll already be out, but the estimate of the consumer price index in the Eurozone, slight uptick expected there from 0.5% to 0.6%, but hardly anything to write home about. In the US, we have pending home sales on Monday afternoon, an improvement from the previous month. 1.4% is the forecast there. And then we have a lot of the manufacturing PMIs coming out, and we start with the overnight one on a Monday night, Tuesday morning, with both the Chinese state's own reading and HSBC's final reading on the Manufacturing Purchasing Managers Index. Of note, it is above the 50 level, which indicates expansion in the manufacturing sector. Anything below 50 indicates a contraction. We also have overnight the Reserve Bank of Australia meeting. That's a central bank in Australia. We're expecting a no change on Australian interest rates. And then here in the UK, we have our own manufacturing PMI, which still remains pretty strong, although a slight dip to last month's 57 level. And we then have the US's version, they call it the ISM Manufacturing PMI, the Institute of Supply Management Manufacturing Purchasing Managers Index. Not exactly a short name, but 55.6%, so a slight uptick from the previous month, and I think the markets will be quite keen to see an improvement in the US economy following that appalling first quarter revision that we had last week. On Wednesday, we have construction PMI, but actually the main event of the day on Wednesday will be the ADP non-farm employment change, which is the private sector company that does the payroll for a lot of big companies. They release a report at 1:15 on Wednesday of their reading on the non-farm employment, and they've got a reading of 206,000, which is an improvement from their number from the previous month, but still nothing particularly to write home about. But that'll as always, that number does give a pointer towards the actual number released by the Bureau of Labour Statistics, which will be Thursday, as we just discussed. Janet Yellen, the chair, as she likes to call herself, of the Federal Reserve, will be speaking on Wednesday as well at 4 o'clock in the afternoon. Overnight, we have non-manufacturing or services PMI coming out of China. So when we get up on Thursday morning, we'll have a better insight there. We've got our own services PMI data on Thursday as well, also remaining very strong, slight downtick from the previous month, similar to the manufacturing sector. And then we have the ECB meeting, the European Central Bank. They make their announcement at 1:15 on Thursday. We're not expecting anything following last month's news. I think they're going to let things settle down, and for that reason we think it's unlikely there'll be much of a press conference, because there'll be nothing to say. And then the main event of the week is the non-farm payroll, or the employment data in the States. They exclude the farming sector because it's very seasonal. They say they refer to it as a non-farm employment change. 211,000. It isn't spectacular. It's a slight dip on the previous month, and the unemployment rate expected to be unchanged at 6.3%. In the afternoon, although there'll be a lot of flux in the market, I suspect, by that stage, we then have the ISM non-manufacturing PMI in the States. We refer to that as the service sector, and in keeping with other service sector readings, it's sort of unchanged from the previous month. That's it. A very packed schedule, and obviously then it's a bank holiday on Friday, so all the US markets will be shut. A very packed 4 days though. We will update you all in our workshop on Thursday morning at 8 o'clock. Thanks very much. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.